Joining us right now on set to talk markets ahead of the Monday morning open is Sarat Sethi, who is managing partner and portfolio manager at DCLA. Of course, he's also a CNBC contributor, and it's really good to see you in person.
Likewise. Glad to be here.
Let's talk about what we've got going on this week. I thought last week was the heaviest earnings week. I'm wrong. It's this week. What are we in for? What are you watching?
I mean, you got 130 companies reporting, and you got the big ones. We know Amazon and Apple. But I'm really looking at to see what companies are talking about in wages and what is sticking and what's not. And I think that's the part the Fed's really concerned with as well, because as wages have gone up, they are getting stickier and stickier. And it's not like you can crawl that back. Maybe you can crawl back price increases. People were talking about that. But I think that's the part. And what that then leads to is, where does that mean for margins? What does it mean for the consumer? Does demand slow down? I mean, one of the things we're looking at is also services. You know, how much of that can you forecast in the fall? You're already seeing a little bit of drop off. So is that playing into what the Fed is saying is, hey, we got to keep rates where they are until we see that happening? And then you counter that with, are we actually getting deflation from China or not? Or are they going to really stimulate their economy? And then the Fed's going to say, hey, wait a second. All of a sudden, input prices are starting to go up, too.
Right. Look, we look at all of these labor contract disputes and negotiations, and some of the really high wages that you see coming out of that, you think, wow, okay, this is a big deal. But labor unions, privatized labor unions, make up such a small portion of the workforce right now. But it's hard to look at that and think that other workers aren't saying, hey, if the pilots can get 35 to 40% price hikes, right, why are you telling me I can't get more than 2%?
Well, exactly. So you get the pilots, you got UPS. Yeah. So take that aside and then just look at even blue-collar workers and white-collar workers. Now you've got the autos. So all that's going to be embedded. And when you look at inflation and you say this is going to be what we're using every day, that's going to add to kind of where we're going to see multiples at some point as well.
Although Procter & Gamble this week had phenomenal organic growth, and almost all of it came from price increases that were not a problem.
Exactly.
But last week, I should say.
So you had Coke do that, Procter & Gamble do that, Unilever had that. The question is how sustainable it is. And if it is sustainable, well, that's embedded inflation into the system. So we have to kind of take that into account as to what your multiples are going to be down the road. The other part that I think people aren't paying a lot of attention to are commodities. So where the whole commodity cycle has kind of been put aside. I know we talked about energy before on the show, but you look at copper, or you look at a whole bunch of the other things, there's potential there for price increases and also for investors to look to see how you can make money there.
How are you feeling about the markets given the huge runs we've seen this year? It's been a phenomenal year for equities. Are the valuations getting stretched, or is momentum working and the economy looks better than anybody was anticipating at this point?
I think the valuations have been stretched on certain stocks. We talk about that all the time. So the earnings have to meet them. So Google did it, Meta did it. So the question is, can the Apples and Amazons do it as well? If they can get their earnings to be commensurate to their valuation, I think you're okay. But if you see something where, hey, you know what, our multiple expanded 50%, but our earnings aren't going up, I think investors are going to take some of those stocks to the penalty box. So there are opportunities out there. You just don't have to be in the top 7 to 10 stocks.
We talked to Joanne Feeney at the top of the show, and she was just pointing out it's more than just the 7 stocks. Some of the other 493 stocks are starting to catch up too.
I mean, look, Uber's reporting tomorrow. Uber's up 80%. And they've done a phenomenal job of turning their business into cash flow positive. So there are things out there that companies are starting to do. They're just not the big market caps of the others. So we have to find, and again, that has to be sustainable. So can we find opportunities in industrials? Can we find opportunities in consumer, healthcare? I think healthcare has been so underowned at this point because it's been defensive. There are opportunities in there as well that I think investors should look at.